Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. How long has it been since I've said that? The three of us have not been together here since like last year. It's been like 2 or 3 weeks, but we all are in the saddle this morning. We got a lot to discuss. Dennis and I were wondering last week who would be the next biotech to get taken out. Well, we have our answer this morning. It is Loxo. We're going to talk about that. We're going to talk about PCG. There are headlines on Friday that they may go bankrupt. We're going to talk about volatility in that whole sector. The healthcare sector, that is, with JP Morgan Healthcare Conference today. We have a lot of ratings to discuss, and so let's just get right into it. Our guest at 8:35 will be joined by Harlan Pyan. He is the founder of Amazing Power Patterns. Always has some good charts to share with us. Joel, well, how was your weekend? How was your vacation?
Fantastic. Absolutely I was actually off the grid quite a bit. I didn't take my laptop, just had my little Surface and wasn't on the grid, didn't watch that much TV, just sat in the sun, read a book on Michigan football, and just had a good time. Swam 2, 3, 4 times a day. Beautiful weather, but glad to be back here, caught up on the markets over the weekend. Wild day on Friday. We could talk about that when Dennis comes on. We had the weekly high and the weekly low, if you're looking at the pre-market, all on Friday. Very significant day. Overnight high, 51.75. That would be in the 25 handle. Don't have much up there for you. That'd be a nice target on the upside. Pre-market low, 23.25. Don't have much on the downside until 25.03. Keeping an eye on unchanged at 31.75 here, or 31.25. And looking at the crude, inching its way back towards $50, up 96 at 48.92. Gold closing in on 1,300, up 880 at 1294.60. Silver coming up on 16, up a nickel at 1584. Bitcoin, did not take a look at a chart on that. 39.90, that's up $215. Triple D, I'm going to bring you in. And how much did you miss me last week?
Oh, yeah. We always miss Joel when he's not here. So we always miss your humor. We miss your levels. I had to do all the levels, Joel. I'm not good at that.
They must have been good.
I was lost. I'm trying, like, Spencer's like, find me some levels on this. I was like, I don't know how to do. Joel's the levels guy.
That's back. It's good to like not do them for like a week and a half, and then you come home, you just wipe out that doc and you start fresh. But I just want to address one thing from the chat here, and I think it's Go Through the Dubai. He's asking me if I've ever seen or heard of the O'Hare play or trade. It is explained in a new Showtime series about 80s trading in Chicago. I have talked about it on the show. It's called the O'Hare spread. And what you do as a trader on the floor, you put on a huge position and you max out your account and you go to the airport.
Yeah, don't do this, but
you go to the airport, and I guess back then you didn't have cell phones and stuff, and you call in, and if the position's a winner, you have them take it off and you come back to the exchange. If the position is a loser, then you get on an airplane and never seen again. So it's a little bit... There's a Detroit version.
About that. I remember you telling me about that years ago. It's one way to do it, eh? So you're prepared. If it doesn't work out, you're gone. You're already on the plane. They ain't keeping you.
And there's a Detroit version. It's called the Metro spread. And that's when you do it from the Benzinga office and you drive to Metro Airport. But nowadays, with the phones and everything, the clearinghouses will track you down before you even.
They're going to find you faster. It doesn't work as well as it did back in the 80s.
So, all right. So, I guess there's a ton of news out there. The Friday wild day.
Yep. You missed a wild week, Joel. And just, and you were saying something in the pre-market show when you were looking at levels on Friday, just to say how wild Friday was and how wild this week was. Tell us what you noticed in the numbers on Friday.
Including the pre-market session, you made the weekly high and the weekly low on Friday in over 100-point range. So if you're a pivot trader like me, your daily and your weekly pivot come together at 2503. If we get down there today, I'm going to be buying with both hands. That's 30 handles away, but that's very rare to see that. Your average daily range is still elevated here, but Fed is.
And that was because we were down so far overnight. And we obviously came back on Friday morning. And if you're just trading Friday morning, you'd say, what the hell are you talking about? But I think, and I'm trying to remember, I think Thursday night we were down significantly. We came all the way back.
Yeah, Thursday, just to give you a difference here, the intraday low was 78.75, and the overnight low for that was way down at 24.38.50.
What was the catalyst that drove us? So it was because we know Powell comments came out, and that was the catalyst for the trading day. Because when we were commenting on Friday on the pre-market show, we were up 300 Dow points. We end up obviously 600 or 700, whatever we end up, and that was off Powell. What was the initial catalyst that got us kickstarted, though? Was it that we knew he was coming to speak, Spencer? Or that there was rumors he was going to be dovish? What was the initial catalyst that kickstarted it?
Remember Friday or Thursday night, we got the headline that we're going to resume trade talks, right? There was that.
Yeah, so maybe that was it. And then Powell just like ganged up on all the shorts there, and they got pounded on Friday. And obviously, I have not been on the full bull train. I've not been on the bear train either. I'm just kind of sitting here, and I was saying even on Friday's show, I'm like, tricky market to call right now. From day to day, like just think about, the action from Thursday where it looked like, we're going to give back a lot of these gains. Maybe we're going to retest the lows on some of these stocks. We had obviously the bad Apple news, that tore the market apart, Dow down, 600 points. And then Friday's a completely reversal. And we get it all back plus some. It's and Doug Cass says this on Twitter all the time, but I think it really applies to what we're in right now. It's the market with no memory. Day-to-day trading action is just, random. It's like random walk theory right now. And sometimes, the market is predictable, but right now, I would say it's anything but predictable. And it's probably because we do have so many headlines coming out. Is there going to be a trade, agreement here? Are interest rates, now going to obviously not go up, hopefully in the future here? At least it seems what Powell says. So, there's a couple worries that, aren't there. But then you've got the worries that, hey, Apple warned. China growth is slowing over here, or, maybe it's just an Apple thing, but, we know FedEx warned a couple of weeks ago too on Europe that there's problems elsewhere. So we're coming into earnings season. You get a few more big warnings and we could be right back in the gutters. So it's just really hard to call here right now. This earnings season is going to be so important. Obviously this week's very quiet, but next week we're going to start kicking it off, and that's going to be the driver going forward.
And then the chat also highlighting we got the jobs number Friday. When we were talking about the jobs number at like 8:35 there, market was down. The futures were nearly down on that number, I think, because they higher than expected unemployment number. But by the time the real liquidity came in there later on in the morning, the S&Ps rallied. So I think there was maybe a delayed reaction to the number on top of the trade talks and then Powell.
And it seems like the ball gets going one direction during the day. One thing you can say is, it seems like we get going one direction here, at least the last few days. It's dictated. Like today, we're obviously no trend at all. We're basically flat here. But Thursday's action, we were down significantly on Apple. We had a little rally in the morning. That was the rally to sell. And then it came all the way back down and rebent to the lows. Same thing kind of on Friday where we had a big pop. And then we had a little sell out there. Around 10 o'clock, we sold off about 15 S&P points there. But you know what? That was the dip to buy. So I guess, if the trend starts going one way, maybe, if you seem like you're having an up day, you're buying the dips. If you're having a down day, you're selling the rips. So maybe play it that way as a day trader. But holy cow, swing traders getting, probably stopped out on everything here. Look like we're going back to the lows. Now we're going back up to the highs. It's a tricky market to be a swing trader in. I haven't been putting very many swing trades on at all, just because of, the randomness of this market. The day trading, the intraday and the overnight scalping has been good. And that's just because, we're doing more inefficiency stuff and there's big movement. But I'll tell you, from a swing trading perspective, it's a wild market.
And also, this wasn't on cue like the September expiration, but, and I've reiterated this on the show, I don't know how many times, that turns in the market around those quad witches. And obviously you had the all-time high in September. That was a turning point. Now, the quad witch this year was, I believe, the third Friday, I think, was the 21st. So you still went, nearly 100 points lower. Actually, you bought a couple days after the quad witch, and they gave 23.16 to 75. And I believe that happened in the pre-market as well. So there's a turning point here after a quad witch expiration, which, could point to an up market until the March expiration. So big rally, though. A lot of unknowns here. A lot of news here for Monday morning.
Ton of news.
And should we
let's start getting into this news here.
Okay. Where do you want to start? I'll let you take it.
Start with the deal, Spencer.
All right.
Another deal.
Another deal. Yeah, we were wondering last week who would be the next domino to fall in biotech space, and it is Clovis Oncology. They're getting acquired by Eli Lilly for $235 a share in cash. The deal is worth $8 billion. So if I pull up a chart of LOXO, you can see that right there on the tape.
Big pharma's buying up some stocks here right now, and I mean a lot of the biotechs, a lot of the smaller, are on sale. And they're coming in. Obviously, it's kicked off with Celgene last week. Now you get LOXO going off the board here. Do we have a ratio here for our risk arb traders, Spencer? Is this a cash deal? Is this cash and stock? Do we have a ratio? I didn't look it up yet because I've been running around like a chicken with its head cut off with all my other positions.
I believe it's just a cash deal.
This is cash deal. I'm just trying to look here too. So yeah, so $8 billion. So what's the cash price?
$8 billion. Oh, sorry, 235.
No, yeah, $235 in cash. Okay, so you poor risk arb traders. Sorry, guys, nothing there for you. Interesting enough, only 3-point discount here. So I guess they're saying it's going to be. There's very little risk of this deal not going through. Usually, you see a little more of a discount than that. So I'll tell you, in this market, I'd probably ring the register right now and not sit around for the last $3.75. Joel, what are your thoughts here? First LOXO, and then talk about the technicals and Lilly, because Lilly is trading down on this news.
Well, first of all, boy, what a disappointment for Celgene shareholders, and I know you're one of them. I mean,
and I'm not now. I sold it, but it was a disappointing price.
Yeah,
the overall price wasn't bad, but it was disappointing. And I don't know if you were listening to the show on Friday, but I was saying the same thing. Completely agree with you. I mean, here I'm getting a deal at 104, and it's cash and stock. And I end up having to sell this thing at $85 because Bristol Myers falls so much on the deal news.
Okay. All right. Because I was seeing the price. I just check prices real quick. So I still, I saw 84, 85, and I'm like, what? That's horrible. That's a horrible premium to take.
It was 104, but it was on cash and stock, $50, and then you get one share of Bristol Myers, and Bristol Myers falls $7. On the initial announcement. So Bristol Myers actually, if you look, actually fell even more. It closed at 52.43, went all the way down the 44 handle. It was down 16% at one point in time. So that's where obviously a lot of the premium and then there's the risk that this deal gets killed. This is a big deal. There is going to be this isn't a slam dunk. Like Clovis Oncology is a smaller deal. I mean, you're probably not going to have any issues there. But on a big deal like Celgene, Bristol Myers, two huge companies coming together, there's always risk, somebody or antitrust issues come in or something, to kill the deal. So obviously there's going to be a bigger discount on a deal like that, but it's a significant discount right now. Easy way, Joel, I don't know if you looked, but it's $50 was the cash price of it that you're getting plus one stock. So you can just add $50 Bristol Myers share pretty quick. It looks like $96.95. I know there's some other little shocking thing in there, but the majority of it's there. Bristol Myers, $50 on that. So $96.95. You go Celgene current price, you got an 11-point discount right now.
And just Spinner point out, I mean, the numbers there, but you'll be watching Eli Lilly today. It's trading down 333, which I don't think.
Smaller deal.
Yeah, it's. Let's see here, man. I mean, there's some air in this thing. Let's see. 333 is your current price. Let me get your pre-market low for you. I need to adjust my charts here after being off here. What is your pre-market low? It spiked a little bit lower. I mean, I would use.
They're not going to kill it like Bristol Myers because this is a small deal. So you've got to always look at the market caps. This is what you want to do as if you're trading any of these deal stuff. And I've done risk arb for years, so I've got some experience in it. And when you've got a small deal like 8 billion, what's Lilly's market cap? It's got to be like 150 billion or something. It's a drop in the bucket.
Yep. Okay.
When you get Bristol Myers and they're taking over a company that's similar market cap, okay, well, that's going to get slammed because they're paying such a huge premium. You got to do it on a ratio of market cap. So, an $8 billion deal for Eli Lilly, which is a $121 billion company, I mean, you're talking, less than 5% of their market cap. So even if they overpay, by 2 or 3 billion, okay, well, you slam 2 or 3 billion off of Lilly's price to make up for that, and you're only down $2-3. So that's the way I always look at it. How much are they overpaying? And that's what they've been doing lately. Like if just, the rough math has actually been working quite well lately. When they overpay by like 10 billion, they slam 10 billion off the market cap. In this case, Loxo closed, if they had to put, at 140 to 240, so say they're, 3.5 billion, they probably knock 3.5 billion off the market cap of Lilly. So down $3.33. How many shares outstanding? Shares outstanding are roughly 1 billion shares. So it's exactly right. So they put 3 billion in the market cap of Loxo, they knock 3 billion off the market cap of Lilly. That's a 2% move. When you have the other move with Bristol Myers, big difference because Bristol Myers market cap was obviously 76 billion. We talked about this on the show on Friday. Celgene market cap before the deal, I don't have it because I just have the current market cap, but 59 billion. So you're talking about, what was it, like $20 billion premium. So if you're going to knock that off, be it Bristol Myers, it's going to be a lot more significant fall on a percentage basis. So always consider that. Just because somebody buys somebody out, you got to look at the size of the deal and what's the impact there. And that's how much the risk arbs sometimes knock it off. It doesn't always work as a perfect percentage. Today, this morning, it is working on Lilly, though. It looks like they're knocking about 3 billion off the market cap, at least in the pre-market.
All right, and your 2-day low is 111.10. You did have a spike below that in the pre-market session, but after that, look for 108.73. That closed at 114.66. That was right up there with Thursdays and Fridays high at 114.74.84. So 115 is your resistance, and I'd say major support 108.73.
If we're going to get all happy in M&A land here and there's going to be more deals coming, what about Bluebird Bio? I mean, you can see on Friday, people were buying this hand over fist. They were buying everything hand over fist. But BLUE is a hell of a lot cheaper. Remember, because we always were looking at Kite. We were looking at Bluebird Bio. And who was the third one we were looking at? I just got all kinds of stuff happen at me. Bluebird, Kite. And who was the other one always? Who bought them? Yeah, Gilead. Who did they buy? They bought Kite, didn't they? Who bought Kite?
Yeah, Gilead. That was Gilead.
And Celgene bought
Juno.
That was it. So I used to always trade, and I've got obviously the pair trader and me from Bright Trading, but Juno, Kite, and Bluebird Bio all together. So Juno got scooped and Kite got scooped. Bluebird never got scooped. And Bluebird is now significantly lower than where it was at the beginning of 2018, was $234. You wonder if anybody might be sniffing around on a Bluebird Bio. And we're not, this is just speculation.
Yeah,
we don't obviously know anything. But I mean, I think the market, on a stock, if you're looking for cheap biotechs, and that's not cheap, but a lot cheaper than it was. If you're looking at ones that could potentially get scooped, I mean, there was rumors that Bluebird Bio was going to get scooped last year over $300. And that's why the stock kept, climbing when it was in the 200s. Now it's $100. I mean, if one of these big pharmas sniffing around, they could probably get this thing for like 160, 170 bucks. Maybe there's a play there. Now, obviously, it's still valuation issues. This market's not out of the woods. And, the same thing Dan Nathan saying last week, which I still agree with, if you're jumping into stocks just on the speculation that they're getting taken over, it's a tough market to do that in, because if you're wrong, you could really get, the beats, especially if the market's going to continue lower. We don't know what the market's going to do, but I definitely don't think we're out of the woods on the overall market. But what I'll tell you is on Bluebird Bio, I was once in the stock looking, as a play, and I look at it $100 and I think, you know what? Maybe take a shot.
Yeah, we got Clovis mentioned in here. Also, Sarepta.
Yeah, that was another one.
Yeah, I mean, but I don't have the education on the stocks. I don't know what's in the pipeline. I mean, and that's obviously for the premium that was paid for LOXO versus, the premium and where it was relative to its all-time high for Celgene. I mean,
can we get Adam Fierstein maybe on the show tomorrow or something? Just Adam's not going to totally speculate, but he talks. Nobody knows this stuff better than Fierstein.
I took a note for a biotech guest here, and I wrote down Paul Yook, and
he's good too.
Yeah, Paul.
Let's get Fierstein a dingle. He's been on our show lots of times. Fierstein will come on.
Okay. All right.
See if we get him on this week. And, and obviously, and like Joel's saying, great point. We're not, we aren't following these companies close enough to know the pipes and to know who could potentially be in play. Not like Fierstein is.
I don't think I've ever owned a biotech company.
What?
I don't think so.
I had Celgene just now. I've actually had some luck with them. I had back in my first one ever that got taken was Genentech, and I was mad about it because I really believed in Genentech, and I really truly believe if I still had, it was Roche that bought them. I truly believe if Genentech was still traded with DNA back in the day, it'd be worth like $500 or $700, and we got taken off the board at $95. So I was very actually disappointed. I got a premium on it because I had bought it $70 and got taken over at 95, but I wanted to hold that stock forever. So there's a few I've been in a few. I've still got a few obviously, but I've been in a few takeovers. Who was it last year I had taken over? It was it was the spinoff of Biogen. It went from 50 to 100. Remember Spencer?
Oh man.
The old Biogen spinoff? Who was it that got taken over? Smaller deal.
Yeah, you forgot you had it even. That's what
that was that one.
But
there's been a couple when you get too many stocks in your portfolio and you forget because it was a Biogen spinoff that I had.
It was a weird
but
name.
It was a good one.
It was a weird name.
It went from like 50 to 100 overnight. Anybody remember in the chat there? Help me out with this one. The old biotech spinoff. I can't remember what the heck the name of it was, but it's funny. Here, this was one of my best trades probably of the year, or best investments of the year because I doubled my money. I actually bought more of it too, and I can't remember. Isn't that funny?
Was there a
trade too much? I can't remember what stock
a D? Was there a D in it in the symbol?
Somebody in the chat will help us out here eventually on that. But anyways, let's move.
No, I just
on.
want to mention one biotech stock that I told you to short 100,000 at 50, and you never listened to me. You remember that one?
That was OVAS. OVAS.
It's gone.
Is that gone?
It's gone.
I got lucky. I got really lucky in that one too. I had OVAS for $10. It went to 20. I took out half my money because I doubled it. It went to like 40. I sold another like big piece and I kept like a little small piece. I sold the rest of it like $27. I never got back in, I think. So I got lucky because it went all the way off the board and gone.
Yeah.
What happened? When did that go off the board?
I don't know. I just pulled it up to look at the chart and it says data.
Did it go bankrupt?
I don't know. I remember seeing it trading into pennies, and then
it was in the pennies for a long time. Maybe it went off the board.
Dennis, Grant Wilkerson has your back. BIVV.
That was that. BioVeritab.
Yeah.
Yeah. That was it. BIVV.
Grant, how do you remember that? How do you remember?
I should have remembered. It was actually I had a few hundred shares of that. It was pretty good. It was pretty good. I think a long-term portfolio. I was like, boom, that's a 5-digit winner.
Grant is the chatter of the week so far, and it's only Monday here. That was a great call. Let's talk about a stock that Dennis made the call. This might be the call of 2018. The GE bottom, Dennis, 666. You must be long the float. Right?
No, I'm not long at all, and I should have been. I played it a couple times though. I had little swings on it down there. I should have just stuck it in the long-term portfolio, but I'm still not. I said, wasn't a long-term believer of Inch. I just thought 666 looks a better bottom than anything else. We asked Inch. Spencer asked him on the show last week, and you know what? He kind of said it could be. It could be the low.
Yeah,
he wasn't full-on bear. He wasn't a full-on bear when he was on, was he, Spencer?
No,
I didn't get him like raging bear.
No, he was not raging. He wasn't raging bear, nor was he raging bull.
No.
And I asked him he was like half seriously whether that would be the actual bottom. But anyway, he's obviously not going to call bottom or top on it. But yeah, he wasn't a raging bear. And then Friday after the bell, we get this headline that Apollo is considering GE's jet leasing business to be worth as much as $40 billion. I don't know how they came up with $40 billion, but they did.
Come on. Well, are they paying $40 billion for
it?
I mean, I'm not.
It's just rumors.
Yeah. Actually, I did take a look at GE over the weekend, and I thought, there's not much resistance like the 860 and closer to $9, and you did get a pop in that. I mean, 40 billion. What were all the assets valued at before that? That's a huge number. So let's see if they may say it's worth 40 billion. Let's see if they're willing to pay that. Keep an eye. Your pre-market high is right there, 868. A lot of stock is traded here, 17 cents off the high. Man, I'd like to see this. I like to see a weak market, get this thing back closer to $8, and I'd look for a swing trade, but can't chase GE up 26 cents.
All right, let's go to the other big story from Friday night. And this was the craziest headline. So I was trading stocks, and we had a dinner date at 6:30, so I had to be done trading at 6 to get ready and to go out for dinner with my wife and her brother and his wife. And right around like 5:50, my filter starts exploding with PCG trading down 20%. I was like, what's going on there? I was like, and it just hits down, and I was like, okay, is that a bad, like, and then it's like quiet for like a good 20-30 seconds. I'm like, did somebody just screw up and sell PCG? And then the headline breaks and it came from Reuters, and it says it's exploring bankruptcy. And I was like, holy cow, it's a huge headline. So needless to say, I was late for my dinner date. But anyways, looking at PCG here this morning, it's trading down 19%. The headline was from Friday night, right around just before 6 o'clock, that PCG is exploring bankruptcy. And we've talked about this on the show. And I think, we've said a few things right in the last year. We said a few things wrong. We said a few things right. But I was saying, there was a possibility. I don't know which show I said it on, but I know I said it a couple times that this could be a zero, because we don't know what the liability is, and it could be cheap at $20, or it could end up being a zero. And I just said this risk is too much for me to go in there and put this in my long-term portfolio because I don't know what this liability is. Sounds to me like the liability is a hell of a lot more than PCG can chew on. Now, is somebody going to bail them out? Or is this, going to go out the board? I don't know. Obviously, this morning they're not. The thing isn't like $5 or $10, so it is down 18%. But I don't want to own a stock that says they're exploring bankruptcy when it's still trading at $19. So maybe market's obviously banking that they are going to get bailed out, and that isn't going to happen. But holy cow, it's the worst headline you can possibly get if you own the stock.
And that's how we talked about it from that perspective is, headline risk. If you're buying the stock, some of your technicals may be lining up. There was a lot of consolidation, but,
meaningless.
Yeah, always
stock says possible bankruptcy. It's going down no matter how good the chart looks.
And the only thing I would say it's really calmed down. And the pre-market low was 1623. You would have had to stick a bit out there at 1726. If you were short, if you think it's going to zero, well then boom, you don't hold on. But 1726 was the low of the move. You did get through that back in the after hour session. You've rebounded. I'm just keeping an eye on $21 right now. There's really not much to tell you from the daily charts, but the rebound high this morning was 2098, and just poke your head, just trying to get through 21. So obviously someone wants out of 21. Maybe they scooped up a bunch on the decline and they're just trying to pair out of it. But resistance at 21, and now we're off that pre-market low. So I'd be focusing more on 1726 than I would have that pre-market low in the lower 16 handle.
The one thing I'll add to this PCG report is that there were a decent amount of hedges in that Reuters story. It's obviously dependent or contingent on whether the government will allow them to pass on the charges to consumers. And they stressed it could be only for the bankruptcy, could only be for part of their business. And it's only contingency depending on the outcome of this legislation. Yeah. And there's no guarantees. So just watch out for that.
That wasn't the details why it trades down $16, $17 and starts to rebound there, because all the machines see bankruptcy potential and they all just hit every bid that's out there. And, when you start looking, maybe it's not as bad as that initial headline that crossed my screen when my jaw hit my trading desk. Maybe it's not as bad as you think. But obviously, you got to look at the other California utilities out there, and EIX would be one of them, Edison. It traded down significantly Friday night on this news, down to 54 handle. It's trading back up again here, 57.80. But man, stocks had a nice rebound here too. This would be one I'd be very scared to own here right now. Not saying it's going to tank here and do the same thing, because obviously this isn't the company that's directly liable, but they're out there as well. We don't know if there's any liability. EIX got killed on the initial hit the PCG took back in November. So just watch. Just want to be careful on EIX as well.
Who's going to provide power in a good part of California?
Well, that's the argument, Joel. That you can't let these companies, and you can't, let them go, or PCG go bankrupt, because you can't. We need power.
Yeah, that's an interesting story, but we'll see what happens at $21. That seems to be the pre-market resistance. Dennis, it is a Spoozer on chair, 25.31 and a quarter. Imbalances this morning. They're probably pretty mixed this morning.
Yeah, they've been really quiet in the last couple of weeks since you've been gone here, Joel. And I guess maybe you're not putting your big orders out there when you've been off the board. But anyway, there's a couple big ones this morning. We've noticed a trend here in GE to have sell imbalances. That's obviously not going to happen here this morning with the positive news. We know the stock's trading heavy, so you knew it was going to have a buy imbalance, and it does. 730,000 shares. It's going to go probably into the millions here this morning, just because it's obviously trading up on the big news that they might potentially sell another piece, and somebody valuing it as much as 40 billion. AT&T, this trend I have noticed, and this has been a 2 or 3 day trend here now, is it's had a lot of buy imbalances every single morning. I don't know what's going on with AT&T right now here, but the stock is hot. And maybe it's just the overall market, but it has taken off from $27 6 trading sessions ago. It is now $30.62. This has been a nice move for AT&T. The dividend yield, this is 666 now, the dividend yield. We have these 666 numbers funny. So just because that's where the GE bottom was and that's where that S&P bottom was. But anyways, it's had a nice bounce here. AT&T, I'm still not a believer in the long-term story here. I think margins are going to continue to be squeezed there. So I'm sitting here looking and
but they got the pipes, man. They got the pipes, and they made a big purchase for content. So I have no idea where internet.
I think they've overpaid for a lot of the content. Yeah. So long term, I'd be a seller of this rally, just my opinion. But short term, trend's your friend. It's starting to come back up here. It's been a nice 6 days for it. So, and there's a buyer. There's a buyer. It seems like every single morning. So I don't know if that buyer is going to continue or not. But there's 266,000 to buy here this morning.
And it's just such a big, probably institutional holding. I think with that 6% dividend, when a blank is hitting a fan here, they're like, oh, well, we'll buy a couple 100,000 AT&T. It can't go down another 6%, right? At least you're covered. And I think your I don't know when it goes ex-dividend again. That's always something to keep an eye on how it, rallies into the dividend. But I think this is just, big volume institutions like to hold it. They feel a little bit of comfort with that 6% return. And then, on pops like this, they probably trade it out and, play it again. But interesting stock. How's Verizon been doing since we're talking about AT&T?
They separated, and the last little while they're starting to trade together again. But Verizon was way outperforming AT&T for a long time. Verizon sold off. It's kind of do you want to talk 50% retracement here, Joel? I'm just eyeballing it here, but 61.58 of the top of the move down to 52. We'll call that a 10-point move. Yep. 5 points off the top will put you around 57. You got a couple tops there right in that area there.
Nice.
I think that's where you struggle here. I know Carter Worth on Fast Money, and I believe it was Dan Nathan, at least in the last day or two, were really they were propping this one and saying they think this is a good buy here. I take the other side of that trade. I think it's a good sell here.
Dennis, you've been boning up on your technical analysis when I've gone. You do the 50% retracement in your head, and you find a triple top to lean on at 57.50.
You taught me well,
That's
Joel.
Unbelievable. And
probably won't work, but it looks textbook.
And look at this. Steve Roberts is piping in. He says T goes ex-dividend on Wednesday.
Oh, does it? Okay,
Yeah.
when we know, hey, this sets up well. We love the run-ups ahead of the ex-dividend dates and the weakness afterwards. So AT&T sets up well. I like it short at 31. You can get up to the 31 area, and I don't know, the dividend obviously plays some games with it there, but we know the dividend stocks are often strong on AT&T and Verizon ahead of the ex-dividend date and a week after. So I love being short after the dividend. So we'll see if we get a shot. Might play this short side after the dividend.
I'm writing notes of everything that I should have done in 2018 that I'm going to do in 2019, and that's going to be the T and Verizon and dividend play, because I've played it on the short side afterwards, but I never really played the run up. But 8:35, and we're going to bring in a guest here we haven't had in a while, an oldie but a goodie. Who we got lined up?
Harlan Pyan from Amazing Power Patterns.
Nice.
We'll be right back in a moment with Harlan. And as promised, we are now joined by Harlan Pyan, a longtime friend of the program, founder of Amazing Power Patterns. Harlan, how has it been?
Hey, it's been pretty good. Can't complain. Market's been pretty wild lately. Of course, Joel comes back, and now we get some settling down here, which is refreshing.
Yeah, well, it's only 8:37, Harlan, but got a
Right.
I got an important question for you. Is your son still? Was it snowmobile racing or motocross racing that your son was doing? Is he still doing that?
No, he's in the Marine Corps.
Whew,
He's been a couple years now. Yeah. He's
what a change!
he's off in parts unknown and can't tell me where he is.
Oh, man. All right. Well, good luck to him and the other troops representing our country here. Well, I asked you for some
Amen.
charts here, and Harlan, you've really outdone yourself here. And the big question now is are we in a bear market, or is it just a deep, scary correction? And Spencer's going to pull up your first chart here, and we got quite a few, so we're going to have to rip through them. But tell us what we're looking at here, Harlan.
Alrighty. Well, let's see. He's got the first chart up.
Yes, sir. Number one.
The NASDAQ.
All right, because I'm not seeing that on your feed. All right. Well, what I decided to do is, because we hear about this, well, at least 4 or 5 days ago before we started bouncing, we're in a bear market. We're in a bear market. Markets are down 20%. Don't you find it kind of ironic the moment that the media starts shooting, hey, we're down 20%, we're in a bear market, that's about the time the market bounces? So I really don't pay attention too much to a lot of the news headlines when they start talking like that, because usually when they start talking like that, a lot of the damage has already been done. So when you look at the first chart, so I figured, what, let's just take a look at some, past bear markets tops and, look at it from a perspective of, all right, well, what if we are in a bear market? What does it look like? So I took the chart of the NASDAQ composite, first chart from the 2000 top to the first leg down. And, you can see what do we got there, a couple thousand points to the downside in fast and furious action. So, it looks like, pretty much the start of a bear market. So, I said, well, wait a minute, let's, not jump too far, because you can see a lot of the damage has already been done in that chart. But what I wanted to do is say, all right, well, let's see what happens, as we move further out in time, which will scroll us down to the next chart. And when you can look at the next chart, you
chart
can
number
see,
2, right? We're on 2?
Yes.
Okay.
Yes, sir.
Okay. Sorry. Go ahead.
That's all right. So, then you see after what I'll call the first shot across the bow to the downside to the tune of, a few thousand points, what happens? Everybody's bearish. Nobody wants anything to do with stocks. And sure enough, what do you see? You see a multi-month rally off of the May lows. So, of course, a lot of people are going to say, hey, that's it. Correction's over, onward and upward. We're on our way to a retest of, the old highs. Well, then when you take a look and you scroll down to the third chart, you're going to see that when all said and done, it was just a bear market rally, and it lasted 3, 4, 5 months. And when you start to see people, talking about, oh, that's it, it's over, you're getting close, especially when you see a chart like this. You get a 3 to 4 month bear market rally, and then obviously just about the time everybody thinks it's safe to get back into the water, guess what? Here come the sharks. So in answer to the question, are we in a bear market? I don't know. Nobody does right now. It looks like it could be the start of a bear market. It's acting like it could be the start of a bear market, but we really truly won't know if this is just a deep correction like we saw off the January of 18 highs, through the lows, and then we, rebuild and repair stage back up to the October of 18 highs. That would be if we follow the script of it just being a deep correction, that would be the script we follow, is an identical repeat of last year in the S&P before the bottom fell out. But if this truly is a bear market, we'll find out 3 to 4 months down the road, a couple of months down the road. If you see something like this show up, then you might want to start to get a little bit cautious. So I can't really say we're in a bear market until I see what the next 3 to 4 months brings, which leads us to the next chart. So what did I do? I said, well, let's take a look at the other bear market that took place in the year 2007. And you know what? You see the same thing showing up. You get that first shot across the bow, where it says A.
Yep.
On the NASDAQ, right? And you get your ABC up, puts in a little double top and rolls right over. So you see, we've got a couple of historical precedences that will tell us if indeed we truly are in a bear market, but we're not really going to know until we get the next leg to drop. I mean, let's face it, they really knocked anything with a pulse. I mean, you could run, but you really couldn't hide in, over the last couple of months. So that's going to, put a lot of people on guard. But just about the time, as you've seen with 2 past bear markets, about the time you think everything's okay, media comes out, everything's okay, that's the time to be cautious. So we'll find out in the next couple of months, next couple of weeks. It's going to be rather interesting to see if we can put in that type of pattern. Bounce mode for a couple of months because we have earnings around the corner, like Dennis was talking about. It's going to be the big question is everybody going to beat by a penny, and is everybody going to be coming out with earnings that are, quote, better than expected? So we'll find out if this earnings season is going to get sandbagged from reduced expectations, because you know what they tend to do, right? We'll reduce expectations so much that no matter what, guess what? Everybody beats. So we'll find out. So it's going to be kind of tricky here as to are we going to keep rolling higher here over the next couple of months? So if we scroll down and we take a look at another couple of charts here, I took a couple of names from what, individual issue perspective of what, a stock looks like when it's topped. You see Qualcomm back in the year 2000, which is the next chart. Same thing, off its peak, came down, hit a little support level, and then it spent 2 months just chewing around. And sure enough, same thing there. It rolled over and died shortly thereafter. And then when we scroll down and look at another past market leader, same thing there. You get the blue box to the downside. That's your first shot across the bow. And sure enough, you get a multi-month bear market rally, and then it rolls over and dies. So at least it's a script that we can pay attention to see if we do continue to do something very similar to this over the next couple of months. So we'll find out. The jury's still out. I really can't say until we find out if we're going to go, let's get through this first bounce if this is the start of a bear market rally.
The one thing here, Harlan, and I love this analysis. I like looking at this, and it makes it, it gives you some perspective here. And maybe the overall market, like the S&Ps, are definitely following a script like this. The one thing I'll say is when you do look at some other individual stocks like Apple or like Square or like Nvidia, these aren't just shots over the how you're putting it, just taking a hit. This is like you lost the whole front half of the boat. Apple's.
Well, exactly. Well, that's really good you bring that up, because there's an old saying: last cycle's leaders, next cycle's laggards. So, you look at like Square, you look at like Roku, I mean, these stocks, like this is always what happens.
They've lost 3/4 of the boat, Roku.
Or at least yeah, exactly. No, think about it. If the stock is down 50%, all right, what's it going to take to get back up there? Say you own a stock and you're down 50%. That stock literally has to double just for you to break even. What are the odds of a stock doing that when you're in a negative climate?
Yeah.
It's pretty rare. So, and that's the thing you want. If we are going to get into if this is the start of a true bear market rally, that's why it's important to pay attention going forward in the next few months to see if this is just one of those bear market rallies that so many bear markets of the past have in common, because if it is, you're going to see some of these big market leaders that haven't gotten it yet, they're probably going to get it. So I don't want to put the cart in front of the horse. A lot of stuff can happen over the next few months, but it's something from a bigger picture perspective to at least pay attention to, because as we know, bear market rallies can be, or bear markets can be really devastating. And here's the thing. If the first leg down was as devastating as it was to like a Square and like a ROKU, what's going to happen in the next leg? So probably be a lot worse. So, that being said, it's just something to pay attention to, that I'm going to be paying attention to for my people for the next few months.
Yeah, and Ed Parker brings up something here, and this is kind of going away from the the technical end, I know, which is your expertise, but he asked a guest about the government shutdown and the trade war impact, and just the stalemates in Washington. Is that that's obviously different than 2009 and 2000, but I think what your answers are going to be is like, yeah, all those things can go on, but they're going to be reflected in the charts, and the charts is what you know. But give us your take on that comment.
Well, yeah, I think I like the charts are what I know, because think about it. Everybody is most bullish at a market top, but the charts were telling you that when you line up your tops on like the S&P chart, the NASDAQ chart, going into October, they were all sitting at trend channel resistance if you lined up all your tops. The market was telling you in advance, that, hey, at the least, we're going to pull back and this is resistance. As far as the government shutdown, I really haven't paid too much attention to it, only because, for the last 20, 30 years, we've been through this so many times. And I'd rather just pay attention to the action speaks louder than words. And that's the beauty of using the charts.
And so
as far as the trade wars, that's another thing. We need to clean that up too. That's been going on for a year now. So, but I think both countries need to get this done. I mean, if you look at the Chinese markets, they have taken it, they've taken a header more so than we have. So they too, they understand, and they know that they need to get this monkey off of everybody's back. And resolution.
And so your time horizons, and I think it's always good to get people on with different time perspectives here. So like these trades that, the swing trades that you're taking here, you might, wait a week, 2 weeks, 3 weeks, a month to get in a position, and then give yourself a generous stop, and then give it, that long to, to bear out on the longer short side.
True. I'm currently what I'm doing. I don't really see a lot out there that I like. I know the patterns that I really like that have a very high probability. And you know what? I'm not seeing them. When I look at the market here, I'm like going, just look at the S&P. What's the overall trend of it? It's still down. Even though we're bouncing, the overall trend is still down. All right. So maybe we're going to bounce and keep bouncing. Well, what are we going to bounce to? You've got some overhead supply up at 2,600. You've got some overhead supply at 2,650, which is where the 50-day is. That's also a 50% Fibonacci retracement of the whole move.
Yep.
So, you've got the downtrend line at 2,700-ish. So there's nothing but resistance. So what I'm going to do is, like you said, I sit back and I do what's called practicing the art of allowing. The art of allowing stocks to come to me at my levels. Simply put, we buy support, we sell resistance. Okay, so what are we doing right now? We're bouncing. Where? Well, maybe we bounce up to resistance. Okay, if we bounce up to resistance, then I'm going to get interested. So, and what would I get interested in if we bounce to resistance? Well, maybe SDS, which is the inverse of the S&P 500 ETF. But you know what? We're not there yet. If we keep bouncing, maybe I'll pick off a little bit of some short exposure, because think about it. If resistance on the S&P is up, let's just say 2,600-ish is where it all starts. Well, that's support on the inverses.
And Harlan, just and John Dodson asking here in the chat too, and I just want to ask you too. What is so here? And you're giving a good case here, and it feels like you're giving the case that hey, this bear market's just getting started. But then you're also on the fence here too, saying that we don't know here yet. And and I obviously agree with you. I'm kind of in the same boat as I've decreased my long-term exposure here just because I'm concerned that that this could be something bigger as well, and that some of the stuff that you were just outlining from 2000 could come and obviously this market could get into a deeper bear market here. What's your gut feeling here? Do you think this is just a slight correction here, what we saw maybe back in early 2016, or what we saw here maybe even earlier in the year? It's obviously bigger than that, but or do you think this is the start of the big bear market? What's your gut? What's your gut saying? Because Harlan Pyan got
the first thought that comes to mind is I'm smart enough to know that I don't know, but I know what I need to see, and which is what we just laid out.
Yeah, what would you need to see to get you back on the bull train?
I'd like to see some chart patterns that you can actually work with from a swing trading perspective, much like you alluded to earlier of, if you're a swing trader back and forth, you're just getting chewed alive left and right.
Yeah.
What kind of climate is that? Who wants to play in that kind of climate? I'd rather work in an area where the wind is at my back versus trying to fight a current all the time. So, as far as, is it truly a bear market? I don't know yet. All I know is I'd rather know what could be coming at me and be prepared in advance. Whether it happens or not, it doesn't matter. I want to know what to watch out for at all times. I mean, what to watch out for and what to watch for are probably two of the most important questions any trader can ask themselves. Because you always got, you can't get to the Super Bowl unless you got a good defense, because they're going to tear you apart. You can have a great offense, but if you don't have a good defense, you're going to get torn apart. So something along those lines. So always, look at what can happen. Expect the best, but prepare for the worst.
We've been on the line with Harlan Pyan of Amazing Power Patterns. Harlan, great having you. We're going to track you down again soon.
You bet. Do so. We'll have happy to talk with you and plenty to talk about, I'm sure. So keep up the good work, guys. Good to see you again.
All right. Okay. S&P's only down $1.50 here at 29.75, just dancing above and below unchanged. So that's going to be a big level today. I mean, Dennis, the question that you had for him, as far for me, I mean, if this market, I mean, I love my 50% retracements.
Yeah.
I figured it last night. I mean, the sooner this thing gets back to that 26.34 level, that's just on the front month contract. I'm looking for that. Can I put a lot of swing longs here saying, okay, I'm going to risk down to the lows? No, but that for me, man, and let's just call it 26.34. Man, we get above of that and hold that close and have some, some lower volatility too. Someone mentioned here in the chat that, with the volatility higher, that kind of still gives the edge to the bulls. So you do need the volatility to come down.
Look at the monthly chart on the S&P. Bring it up, go back 6-7 years. Just bring it up. And you look at this wicked rally that we've had. I mean, we went from, S&P 666, we know we've joked about and talked about that low back in 2009. So basically over the last 9 years, and now you're talking about 2,500, you're talking 300-400%. The market's rallied in the last 9 or 10 years. When you look at, this chart, and I don't know if you have it up there right now, Joel, but if you just if you can bring it up, Spencer, bring it up. And it looks like this is the first, real serious, potential, but it doesn't even look like it's a big fall yet. So, there's two ways you can look at it. You can say, okay, well, we're still kind of almost trending up. So the trend is still your friend, but it looks like a serious, it's the red candles are so serious looking that it looks like it wants to take it out. And that's why when I look at it in this long-term perspective, and this is having my longer term cap on, I think we're just maybe getting started and on the downside. And that's what scares me. And that's why I've raised, like I said, and Joel, you when we first started the show in 2013, 14, 15, you called me the perma bull here. And I just kept, no, I'm fully invested. I'm going with it. When I'm sitting with 40 or 50% cash, I'm scared. So I might be wrong. Maybe I'm going to be wrong, and I'm going to really regret, raising as much cash as I did. But I raised more cash again last weekend into this rally. I think this is the nice rally. And if you've been nervous about this market, I've had some interest stuff. I've had some preferred stocks. They've rallied, maybe interest rates aren't going to go up. Maybe the Fed's got this market, and maybe we're just going to go right back to all-time highs. But if we're slowing in China, or if, we're slowing in Europe, and which obviously Europe's got its own problems, there's a lot of things still to worry about here. So, yeah, we're having a nice rally here right now. Yeah, the bulls got some control, but Harlan Pyan laid out some nice charts here too. You saw this back in the years 2000. You've seen this. Nothing goes straight down, and that's why it gives you chances to get back out. And that's why, I'm not 100% cash, because I'm not, firmly that we're going. If I really, firmly 100% believed that, we were going into a serious bear market, maybe I would raise more cash. So I've raised enough, though, that if it goes into the serious bear market, I'm not going to get hit, I got hit back in my investment portfolio in 2007, 2008. If it comes all the way back, I'm still participating. But if you're 100% invested right now here, I'd be very scared. Or if you're on margin invested here right now, I'd still be very scared as well. And I think the recent rally in the last week and a half is giving you a chance to lighten up. So that's all I'm saying is I'm exercising a lot of caution, because when I look at this chart here, we could still have a lot of work on the downside. And don't think the market's cheap, at 17 or 16, 17 times. It can still get cheaper. There are some cheap stocks out there, and you can still have a stock picker's market. And yeah, I think some of the biotech stocks, could show some life here. It looks like we're getting some M&A action. I talked Bluebird Bio a little bit this morning. But overall, I'm still somewhat concerned that this party for the shorts is not over yet.
Dennis, also, if you're looking at the monthly patterns, when things got going in 2000 to the downside, when you started getting some big red candles, that one did not end until, 2000, late 2002, early 2003, when you get those kind of red candles. Also in 2007, you got the red candles going to the downside. That one was a little quicker of a bottom in 2009. And then you just look at that. The two of the last four were just into January. Those are some big red candles here, and you're coming from a much, much higher level. So just coming, from that perspective, and I don't want to get into politics or economics or what the Fed's doing. I'm just looking purely at chart analysis here, and it says, these red candles, there's some work to do to get back on them. So good thought provoking material there from Harlan.
Yeah. Great. I love seeing those charts, and it just makes me a little more comfortable with, where I am in my cash position, because, when you see the market rallying, you think, man, I'm 40, maybe I shouldn't be in this much cash. Maybe we are going to go back to those highs. But when I look at that long-term chart, and I look at what it did, and when Harlan was showing us, what it did in 2000, looks like a similar setup. Not saying we're going to do that. Just saying, what if we did? I don't want the kind of exposure where I'm fully invested. I think I want a little bit. And cash is a little bit of competition for the stock market now. You can tie money up at 2.723%, at least you can in Canada. So I just tied a bunch of money up at 2.8. So, it's a little bit of competition. That's risk-free money, 2.8, unless you think the government of Canada is going bankrupt. But there's competition. It's in where we were in, even looking at preferred stocks. So, you can look at like the PFF, as a good indicator. Nice little rally last few days, because obviously, Powell comments too are going to help that. But, you look at it, 6.18% dividend. You're going in preferred stocks, 6.18, and those are long-term perpetual preferreds, most of those that's carrying. So you can go on. What's your long bond right now? What's the 30-year, Spencer? What's the yield on the 30?
Oh, gosh.
Do you have it in front of you? I don't have it in front of me.
It was itching over 3, wasn't it? And everyone was worried. It did get.
What was it? Where is it kicking around?
I thought it was kicking around 3, and everyone was worried that it was going to 4.
I thought it was more than 3 now.
Yeah, no, it's more than 3, but I don't think it's 4. But 3.5. Maybe.
But that's what you got to compare it to. When you're, buying this, you can say, oh yeah, the PFS liquid. Well, the 30 years liquid too. You got to look. These are long-term. It's holding long-term preferred stocks.
2.92.
That typically. Where are we at?
2.9.
Okay, so call 3. So you're picking up 3% by going in, full on, preferred stocks. And yeah, you're getting a lot better dividend on that. But if you're going into an interest rate environment where, it's flat or still skewing up a little bit there, this gets hit. Now it's come back because Powell kind of, went really dovish comments there. That's why it's come back. But I'm not jumping in, putting on, and you do have exposure. I mean, look what happened to PFF. And I don't know if we got the charts to go back that far, but during, the financial crisis, again, all preferred stocks got annihilated. So don't just think, oh, well, there's not that much risk, only interest rates. I mean, if you get into a situation where there's all of a sudden, some smaller companies, having some problems or credit concerns, these things really get hit hard too. So you're taking on some risk to pick up the 3%, which I'm not willing to take on right now. So I was selling some preferred stocks on Friday into this rally here. So, and that's where I've raised a lot of my cash as well. Still got exposure, still sticking with my Apple, still sticking with, and I bought some Western Digital, because Sean Udall was on our show there, and he was like, I was like, well, you pick your spots and you try a few different things, and you still want some equity exposure there. But just, shuffling the deck a little bit is what I'll say, and a little bit more shuffling to the cash side is how I've been doing it into the recent rally.
All right, Dennis, kept you 2 minutes after here. We will let you go. I just, I wrote down, let's see, 4 stocks here in the chat. I'm going to do those real quick. And if any more pop in, I'll cover those and we will take it from there. So Dennis, thanks a lot. Great input today. We, did do as many stocks and ratings and things like that, but we really got a good look at the macro picture. Someone wanted me to take a look at ROKU here. Wish I knew what the future of TV is, but I don't here. That's trading up $2 in the pre-market trading. 35.84 is your current price. Someone had, who was it, Needham or somebody that called this their stock of the year, and so far it's been performing pretty well, bumping up against $36. Going on the daily charts, I see a high at 35.78 and 36.93. So keep an eye on those. Any news?
Yeah,
news
there is a headline this morning from ROKU, actually from like a minute ago here or less than that. They estimated that their Q4 active accounts exceeded 27 million, and that streaming hours for the quarter are up 68% on a year-over-year basis.
All right, take a look for Tony Yayo, who hasn't been around in a while. Micron here, up 56 cents at 32.56. You did find, someone after hours and the pre-market, they don't want to see this thing going through 33.60. Several highs there, so we'll keep an eye on that. We have a high on the daily chart right there at 33.58. After that, you got wide open to $35. So pre-market, after hours trading, confirming on your daily charts here. So, get a good day in the market here. This is not a bad looking chart here. So let's see if we can take out 33.60. Also, Sage Therapeutics. Of course, there's going to be a lot going on in the biotech sector after the takeout today.
And they had news today as well.
Oh, up $41.
Yeah, they met primary and secondary endpoints in a phase 3 study for a drug that treats postpartum depression.
All right. Well, let's see here. We are trading, no, not quite at an all-time high. I'll just give you a pre-market high. Your pre-market high stands at 140.50. $2 away from there. So what you want to see, if you want, you just want to see a barrel through that 140.50. You have a monthly high after that, 144.31. But very important for this to take out the pre-market high, or I would look for some kind of fade in this one. Quite a bit off its all-time high. Its all-time high was at 195.97. Someone wants us to take a look at Clovis Oncology, once again in the biotech sector, up to 21. Is this moving on anything other than the Loxo takeover?
No.
Okay. Boy, I'm ton of resistance here at $22. I see multiple highs at in the 22 handle, going from 22.04 to 22.47. First things first, taking out your pre-market high, but you're pretty close to that. That was 20.74. So tons of resistance in the $22 handle. Also, what else did I mark down? Netflix had a big day on Friday. Was that just market related, or was there some news out on that one?
I feel like there was a headline, but I don't know if anything was too big on. Let me look on Friday.
Follow through.
Oh, well, they did hire. They got the new. Was it the CFO they got? No, that was. No, I don't think anything.
A gap and go into a gap and go. So long way to go on this one. Trading at the highs of the pre-market session. Your pre-market high 303.77. You're above that. First time above the 300 handle in quite a while. Highs, let's see, last time we closed over 300 was back on November 9th at 303.47. So I would use that as a target because the day before that closed at 317.92. So that was like almost a 15-point drop. So we'll see what happens at 303.47. And on the high that day, it was 312.98. And stock that probably puzzles me the most here, Microsoft, has pulled back. And then every time I take a short in it, thinking, okay, everything else came in, this needs to come in, it rallies like $3 or $4. It's down 53 cents, 48 cents in the pre-market, trading at 101.35. But they are coming into an area of interest. I'm going to keep an eye on 102.50. 3 of your last 5 highs, 102.40 to 102.51. So that is the area that I'm looking at as a major resistance here in Microsoft. Gordon B. Mentions that JPM Healthcare Conference is today. We didn't get to mention that. Are we doing any coverage of that, or just got to keep an eye on your tape?
We just got to keep an eye on your tape there. Some stocks that could be in the news: Sarepta, Biogen. We've mentioned these already. Gilead, Bluebird. So keep an eye on the IBB today, tomorrow, basically through Thursday, I think is when the conference ends. You also have CES starting this week. So if you see some pops in NVIDIA or AMD or any tech stock for that matter, and you're wondering why, yeah, that could be a reason there. That'll do it for our show today, folks. So thanks for listening. If you missed any part of it, catch our podcast. We're on iTunes, SoundCloud, Stitcher, TuneIn, and Google Play. Thanks to our guest, Harlan Pyan. Thanks to all of you in both of our chat rooms, both on YouTube and premarket.benzinga.com. Please remember, all the information from our show is for informational purposes only and not meant to be investing advice. On tomorrow's show, we'll be joined by Nick Shaheen, as we are every Tuesday. Until then, have a good day, everyone, and we'll see you on Tuesday.